The planning conversation starts here on the Income Protection Podcast. Here's your host, Mike Cogdall and Grayson Owen.
All right, Mike, we're back. Final episode of 2025, my friend. How are you?
Grayson, fantastic. How are you? First of all, wish everybody out there a joyous holiday season and normal stuff here, my friend. It's raining. We're a little cold, but we weren't like Iowa cold, so we'll be okay. What about you? What's going on in your world?
Not much new, man. Not much new. Just follow up from a couple episodes back. I'm a self-proclaimed winner of the trash can pile-up contest. The photo that I sent you, maybe I'll put it on social media. I don't know. But my family managed to almost stack trash as high as the trash can itself outside of the lid before I could take the garbage out. So there you have it.
For the audience out there, we had this conversation, for those of you that don't remember, this will take 2 seconds, about it's amazing how children can almost like Jenga or something. They can pile stuff up instead of watch it fall down and get stuff to balance on a full garbage can without it falling to the floor. Grayson's tribe managed to do one better. They just started putting boxes and stuff in front of the garbage can when it was already 7 inches higher than the can and the bag itself. So he is proclaimed the all-time can winner, just so you know.
Yeah. There we have it. There we have it. Well, enough about garbage. We're here today with our year-end episode, looking backwards and looking ahead, and we're with our good friend and colleague, Alex Wesdorf. So, Alex, welcome back to the Income Protection Podcast, man.
Yeah, thanks for having me.
Awesome. Well, hey, we'd love to hear from you on a variety of topics today, but to kick it off, how did the year go? What did you learn? And, what are you looking at moving forward in the industry, and what should we be looking at?
So, the year's gone really, really well. It went a totally different direction than when I kind of create plans. I just barely came over here at the end of last year and had an idea of what I was going to do. And that kind of just blew up, and I totally pivoted. And so it went way better than expected in terms of just way more dialogue with people I knew nothing from, the prior carrier I was with. And so super exciting, but we'll get into a lot of this, but I think social media is still the place to be in terms of marketing. I think the old way of doing the marketing it's not dead necessarily, but it's definitely something that I'm not entangled in terms of your local meetings or anything like that. I really do a lot of social networking via social media versus in-person events.
What potholes and giant bumps in the road did you encounter this year? I mean, we all like to talk about our successes, and we will absolutely do that today because I know you had a really good year, and you are the guy, both of you two. Hats off, because there's 365 days in a year. For the listening or viewing audience today, these guys probably posted 361 times. So they weren't kidding about social media one bit. I didn't even give them enough likes because I forget. I'm new to this sort of. But anyway, what were either potholes or major bumps? Things that, one, unexpected or just didn't really go the way you anticipated after coming from corporate and venturing out on your own?
Yeah, I think that the thing that we always talked about, or I knew about at corporate, was, the DI conversation is dwindling. But you really don't really realize it till you get out in the field and you see from a brokerage perspective, it really is dwindling. It's a conversation that is being had less. And, the thing that we talked about earlier this year, there's less carriers, which means there's less wholesalers, there's less boots on the ground to have this conversation. I think that I was kind of shocked at hey, just this ignorance in the marketplace of what disability insurance really is. I knew that to a degree, but man, I'm talking with people that are way smarter than me. And they simply, it's not that they don't know that disability insurance exists. It's that a lot of them just don't want to look dumb in front of their clients because they don't know how to articulate that conversation. And so, you're always going to have some people that just don't want to do it regardless. But I think that's been my biggest pothole, is just people don't want to jump into something when they're already really good at something else that their client already seeks them for. Their client doesn't necessarily seek them for disability insurance, and so they don't really want to mess around with it. So I wasn't really anticipating that to the degree that I've seen it, where everybody doesn't like insurance. We talked about that earlier again this year, but man, it's just there's a lack of ignorance. You think of all the designations people have in the industry, whether it's CFP, a lot of them are getting EAs, SEPA, all that stuff. those are really, really helpful for the clients that we want to work with, right? But there really isn't education around what is disability insurance. And unfortunately, the marketing dollars for these companies are not spent on the disability product outside of Aflac. And so people they really don't have an understanding of the marketplace today. And it's way worse than it was 10 years ago.
And would you say, and this is my perspective a little bit, go to anybody that is in the financial services industry, because I hear this an awful lot unless I'm hanging around with the income protection gang. And I spend an awful lot of time surrounded by my income protection gang, my friends, people that eat, breathe, and talk this constantly. One of the things that I've learned from, and it's not poo-pooing anything, is it's not worth my time. A $5,000 premium is a $2,500 check. If I get paid monthly, it's a couple $100. And I'm not saying, nobody argues the fact that somebody should have it, but it's like right now with what I'm doing in my life, and a lot of people, we all do business that way, right? But, I'm not going to do something that's not worth my time or perceive it not to be worth my time. Did you run into that a fair amount too?
Ton. I mean, you think about it, like what you just said, like that $5,000 policy, average policy is what, a little over $2,000, in premium. So if the person's making $1,000 and it's an extra question, it's kind of an invasive question, obviously, with morbidity, and you have to go through underwriting, and the underwriting doesn't turn out well, they're like, what am I spinning my wheels for? And that's a fair question. Doesn't mean that it's not necessary for that client, but a lot of people have pivoted away from it because it's just an annoyance. And that's the same for life insurance too. And so they might outsource it. They simply might outsource it because they're just like, AUM pays the bills of the people out there. And that's why I go to my financial advisor, right? It's like, hey, help me structure my retirement plan so that I can get there. That's why people aren't thinking of like the risk mitigation. And I would say the biggest thing that I've noticed is the career channels. So all these carriers, most of these carriers have a career channel. Some of them are still very DI focused or life focused. They're teaching their people that they're bringing in. And so those people continue to have those conversations before their clients age out. But some of the career channels, they're not talking about it at all. It's solely on how much assets can you get in the door and how fast can you get them.
I think you all just perfectly outlined the two main psychological reasons why people are walking away from the business. They're letting themselves off the hook as advisors because, number one, as you alluded to, they have too much on their plate, and so they can tell themselves it's okay to skip over it because I'm specializing in XYZ. So that's number one. Number two, which Mike kind of outlined, is, hey, this isn't part of my revenue model. I focus on higher ticket items or whatever it is. And they don't even realize that DI actually midterm to long term is actually a high ticket item if you actually build a practice around it. But it's interesting because both of those are really in the psyche more than anything else. They're not really true because the advisor knows deep down that, yeah, they might not feel the responsibility or obligation to help the client, but the clients usually need this stuff and they need help with it. So ignoring it doesn't remove the problem from the equation. And so it sounds like, from our many interactions, Alex, you're finding a way to engage with these advisors to remedy that. And that's what's important. So it's something that just can't be ignored, but we got to keep getting creative to find more ways to impact more working Americans.
I think what's really interesting is I talk to a lot of advisors and a lot of them do a really good job. They're not just like money managers. They're building out, teams of like, hey, I have a CPA or I have a law team and they have a P&C and, because they understand taxes, law, umbrella policies. So a P&C, all these people are necessary. But the one thing that they're forgetting and they just don't realize it is the income protection plan. All those people don't provide the income protection plan that they can do themselves. And so when they're building out like their network of, hey, this is what I do for you as a client. I don't know how to do some of these things because I'm not a lawyer or a CPA, but I have people that I will partner with. They don't have a DI person. And it seems like the DI people have to become truly a specialist to get in to be part of their team versus them just doing it themselves.
Right. And I wonder if when those insurance-focused experts out there, when they get referred a case, let's say like a RIA or, a CPA firm, whoever it is, they refer in an insurance specialist to go help their client. but maybe that insurance specialist is life insurance focused. And you're basically alluding to this now, I believe, right? So it's like, what happens if they think they're okay, but that life insurance expert didn't know better to bring up DI? And so it just gets left out and no one knows that it's left out, right?
Yeah, and life is like way more complicated because there's so many different levers that you can pull in for strategy. Disability is pretty plain Jane. It's a term policy on the disability side. So I think that I work with a lot of people that they know how to structure life policies that I don't understand at all. But like the simple fact of just income protection it just evades them. So that's been my biggest pothole. It's an ongoing thing. I think the success that I saw at the corporate level and today is if I can have a really good conversation with a financial advisor and they can understand it and then they go buy it themselves. That's when I know that, hey, they're going to start having this conversation with every client that it makes sense for, right? And so I've seen that with, probably 6 or 7 guys this year who are like, man, I just never thought about this. I'm 29 years old. I should probably buy this myself now. I'm like, you should. Right? Think about it. If it's good for you, it's going to be good for your client. So I always give the analogy, like if I worked at Ford, but I drove a Toyota, I'm probably not going to be a good Ford salesman or like have a conviction that Ford is the car because I drive a Toyota. And so I think a lot of financial advisors, if you don't own it, the likelihood of you selling it's probably very unlikely.
It's funny because you say 6 or 7 and the number of people you talked to this year is
1 million.
1 million, sure. And that's kind of the part that I don't think I'll ever understand. And again, you guys know I've been doing this since 1987. If you don't own it, you won't sell it. And because there's no conviction. So when you talk to a financial advisor, and if we can get off this, any kind of financial services person, and you talk to them about buying it on themselves and they don't, give me an answer that somebody gives you.
I mean, it's the crappy answer. It's not going to happen to me. They're not saying that out loud, but that's kind of what it is. Because if you start hemming and hawing about, I feel like I've got the conversation down when it comes to people. And they're like, oh man, that's a really good idea. I've never thought about that. And I'm like, yeah, I always end that conversation with, what have you done for yourself? They're like, well, I have it through work. I was like, man, I just went through this with the group policy. Like, what are you doing? Like, that's not going to be enough. So then honestly, like I've gotten so busy that I'm just like, that person, they don't care. They don't get it because they won't buy it on themselves. So everything I just told them that's good for their client, that's not good for them, that's a red line through that person's name. I'm just moving on because that person there's no conviction. You don't sell what you don't have conviction in. There's people that hate different types of life insurance and they will not sell it, right? Because they have a disdain for it. But if you don't have income protection yourself, then you don't probably think it's worthwhile for your clients. I still get these financial advisors that will say, well, I don't have a doctor and I don't have a dentist. And I was like, God, if a doctor makes $450,000 and you work with an attorney that makes $450,000 or a business owner that makes $450,000, it's not about the job. It's about the ability to make money because everybody can get sick. That's just the reality. I think there's just a disconnection of what disability really is. And that has it's like a cancer that's just invaded the industry where just people aren't selling because they just don't understand what it is. It's not, and it's really not their fault, really, because we all have our life and health license, absolutely worthless. Like it doesn't teach you anything. So there really isn't an education unless you start out at a carrier potentially that educates you. Like you just don't see that very often.
Yeah, and I think the other thing that's interesting that I've seen with advisors when you ask them if they need to get a policy on themselves and they're going to throw an excuse your way, I feel like a lot of them try to convince themselves that there's time to go get it later. They don't create self-urgency like they would around something else for a client, right? They let themselves off the hook because they tell themselves, oh, I'll figure it out later, whatever. And they're doing the same thing that clients do, and so it's interesting to see how that play out. Alex, so thanks for sharing kind of what happened in the past year and everything. Also would love to hear where you think the industry's going. And as part of that, I'd also love to hear what you'd like to see from a technology and process standpoint as well, because I know you're really dialed in that component of the sales cycle. And you've been super helpful with DIBroker East and our firm and me, helping kind of fine tune our part of our sales processes. So I'd love to hear from you. Where's the industry going, and how can technology potentially help us and the carriers maybe better dial in their processes?
Well, I think that if you look at LIMRA data over the last 5 years, you start to get alarmed at what is being written and what's not being written. And what I mean by that is you look at application count, and for me, you just see this, right? And it's not that people are healthier today than they were 30 years ago when they were buying it. It's just the conversation is dying. And so I worry that because there's such a hyper focus on just getting every asset under management and there isn't a risk protection plan, I'm worried about what this will lead to, what it's leading to. It's going to leave a lot of Americans exposed. That's what it's going to lead to. And so, with the different models that you can be a financial advisor, you can be with a broker dealer, you could be, so you could be fee based, you could be a hybrid, you could be a fee only. I think that it's a little bit scary to see, if you're fee only, you don't write insurance, period. And I believe if you don't get paid for something, you probably don't care as much about said thing. It doesn't mean that you don't care. You probably care a lot less, right? Like I want my people to get taken care of, and I have a guy for if their car breaks down. I don't get paid when their car gets fixed. My buddy gets paid. So, but I want to still take care of my people. So it's not that I don't care, but it's kind of out of sight, out of mind. And so I'm worried about where the industry is going to go. And I think there's just a big stain still on our industry when it comes to insurance, because there's people out there doing bad things when it comes to insurance, but there's also a bunch of bad players when it comes to investing your money incorrectly. A little worried about where the industry is going, just with less carriers. We've had a couple carriers hop out of the industry in the last couple of years. But I do there is like a glimmer of hope, because there are the carriers that we do have. They're very strong. They want to grow. They're thinking of new ways to help educate the masses and come up with new products and come up with easier underwriting. And so they're listening to us. I feel like a lot of the carriers that we talk to, they truly want to partner. So there is a glimmer of hope of trying to help us get into the thing, but we need more voices. We just need a lot more voices.
Well said. Well said.
Well, without the voices, which we've been talking about awareness since we started this, Grayson, day one, without the voices, you mentioned a couple of minutes ago, Alex, team, CPA, PC guy, everybody. I would say this is fair to anybody, that if you're not going to do it, we actually beg, encourage, plead for you to go find somebody to do it for you. Because at the end of the day, that client, no matter who it is, no matter how much they invest, no matter how much life insurance they buy or annuities, has the same possible problem tomorrow that they do today if we don't try to figure out some way to mitigate that issue. And that's just asking simple questions. I always have said this, and I don't know what you guys think about this, is, what? We should allow clients decide where they want to spend their money. And without giving them the option somehow of spending their money on income protection because they're worried about their family and I'll make up a number, $400,000 a year, and they can insure a giant piece of that. Shouldn't we allow them the opportunity to spend their money? What are your thoughts there, guys?
I agree. I mean, I think that the number one reason why people don't buy disability insurance is because they don't get asked. And I think if you start asking more and more people and you just educate people on what disability insurance is, it's income protection, right? It's income replacement in the sense you do the same thing with life, right? We know that if you die, you get this check, right? And we know that you're going to die. We just don't know when. So we have to do it. I think that on the disability side, it's the same conversation. I always give the example, you can get cancer, fight it for 2 years, get out of work, and then die. Or you could get cancer, fight it for 2 years, and get back to work, right? Those are all possible scenarios. And all those scenarios that are possibilities will wreak havoc on your client's life. You just have to educate them. And once people are educated, then they have the educated decision of saying, no, I don't want it. But you have to give those people that chance. People just aren't given that chance.
I agree, because, one of the things I've learned over all these years is oftentimes the cliche is it's too expensive. But how can it be too expensive when you don't know how much it costs because you don't know what it is? Yep. So I'm kind of throwing that one out the window for 2026 when someone says it costs too much. It's like you don't have the faintest idea what it is, let alone how much it costs.
Well, I also think that there's
you need to step back and think about these things.
Yeah, because we do this with life insurance. Like maybe the number that you might think for the client is $5 million. But they're like, man, I don't want to spend the money for $5 million. Let's look at $3 million. You're going to write the $3 million because we know that something from a life perspective is better than nothing. And that's the same with disability. You don't have to get the bells and whistles, but you need to have a plan. And just saying, well, that first quote, not the greatest, don't want it. We can talk through that. And here's some different ways we could make it a little bit reduced in cost. I do that all the time. I have a target price tag of where I want to be percentage wise of their income.
What is that?
It's less than 2.5%.
A great number. I agree.
Because I think, the number, the number was 3%. That was what I was trained on. And I really don't see that. Like, I think you go above 2.5%, people, depending on like the income, right, how much you really are making. If you're making $800,000, you might not care. But like, even if you're making $200,000, $300,000, you're going to care about that number a little bit more. So I just think that's having a plan doesn't mean it's robust. Like, it's the best of the best policy, but it is knowing that you're going to have income, and it might be a 5-year benefit period. It might be a 180-day wait versus a 90-day wait. Well, at least I know I'm going to get money. If I'm off for 2 years, I know I'm getting money. And I think that's the ability to pivot in that conversation is so huge from a cost perspective.
So what do we see 26 looking like, gents?
I think that you'll see a lot of technology and underwriting advancements with the carriers. That's the thing that I think I'm the most excited about. It's 2025, we're about to be 2026, and disability insurance is like the last to get updated, right? Like, I think of like the quoting tool that I had on at the carrier. It took forever to get web-based. We had the same tool for 20 years. And so I think that what you're seeing is every other part of the industry is just easier. DocuSign makes it easier. They have all these CRM tools that make it they can just type things in. You have ChatGPT, you have, right, with AI and all that stuff. And so I think that there's going to be some carriers that will step up to the table and say, maybe we don't need as much of this information as we used to when it comes to labs. Well, there's not a lot of data that we get from labs that really help our decision one way or the other. And I think that, again, we want to make it an efficient process for people. So e-application, e-delivery, DocuSign stuff, quotings, quick, with all that stuff, but then the underwriting piece, because nobody likes underwriting. I don't like underwriting. Sometimes underwriting is absolutely necessary to go get medical records. That's a different conversation. But I think that's what I'm most excited about is like the technology play from these carriers, as well as the underwriting removal of some of the underwriting requirements that they've always had that isn't relevant to today.
See, and I'm really simple, guys. I've wanted this for 30 years. I just wish we'd start using the term disability insurance collectively as every carrier, to stop using it January 1st and say, you know what, we sell income protection. Because I don't know why you would call something, and you have heard this 1,000 times, call something life insurance when it's really death insurance. Why do we call it life insurance? It's really death insurance. It pays a benefit when I cease to exist and stop breathing. So let's call income protection what it is versus what has to happen for you to have some action taken. No, and it ain't going to happen. Get me, guys. I said my 26 wish list. If we could accomplish the 6 or 7 carriers out there to say, you know what, we're going to rebrand it tomorrow and we're going to quit using those 2 letters, DI. D-I. D-I, D-I, D-I.
When I DM people, say DI, and then in parentheses, I say income protection. Because it's a psychology move, right? Like, it's just a psychology thing. They hear the word disability and they think of a wheelchair. And they hear the word insurance and they want to run. And I said that earlier this year, but that's so true. Like, people hate insurance because they don't see the value of it until they need it, right? Like, we talked about cars before we got on this. Like, you see the value of your car insurance right now because you're getting a check, right? And so we have to articulate what disability insurance really is. And I think phrasing it from it is truly income protection, I think helps kind of offset the psychology of people that think that I'm just going to follow the tree. That's the only person that gets it.
I think with lack of awareness, and this is the only reason I digress on this a little bit, I think lack of awareness that contributes to the problem. If somebody laid down a little list of things they're going to go over and they're going to go income protection, somebody is going to listen to you for a second because it's going to resonate at least a little bit. Income protection, what do they mean by that?
Right.
What do they mean by income protection?
It perks your ears up at least, right? Like disability insurance, you're like,
because disability, the first thing I've always said is it means this, gentlemen. It only means one thing, the blue signs.
Yep.
That's the only thing that I am. The good parking spots at Super Target.
Yep.
That's disability to almost every American there is. That's a disability.
Right.
But anyway, it will not happen, but it's, if I can have a wish from Santa, that's what I wish for.
Yeah. I just think that, I think you're going to see a lot more specialists. Obviously we've all been doing this for a little while. And so I think that's been something that social media has brought for me, is that I'm viewed as a disability insurance specialist.
As you are. And so is Grayson. And I think that's the direction that we need to go. There are people that are estate planners only. Grayson knows this, tax guys only. There are people that do very specialized things. I think that's the direction we need to go. And then I just think everybody out there that's in financial services needs to go find somebody to do it for them if they don't want to do it. And there's a whole lot of ways to get that done.
Yeah, I think that we talked about broker earlier this year, and that's something that I still do. Like, I still have plenty of people that are in the financial industry that they're like, Alex, I don't know this stuff. I don't necessarily want to learn it. And again, it's not a harp on them. It's like they got a lot of things going on. They got a lot of clients. They're looking at so many different things because every client is individualized, right? They all have something different, but they recognize, hey, this is a gap in my planning. Alex, I want you to do this for my clients.
Well, I think that's very commendable. I just hope we can get more and more and more people that are not going to do it. I'm not going to say don't want to do it, that are not going to do it. Find somebody that does. And on that note, Grayson, what's your 26 looking like, my friend, other than the trash?
Yeah.
Yeah, I'm gonna have to stay on top of the trash better in 2026. And I think that was the general reaction in the kitchen. When I said, what's the problem here? And they literally said, well, you need to be quicker at taking the trash out. So as Rodney Dangerfield would say, no respect. So it is what it is.
Specialist.
Yeah, exactly. So I'm the trash specialist in addition to being a DI specialist. But yeah, 2026, I think exactly what Alex is saying. And I hope to see some technology advances amongst the carriers. I think everybody would love that year over year. Broker business forecast looks strong. I think, that, as Alex was just saying, I think that's going to become a more significant path for really anybody who wants to grow their DI business, creating a broker business model. And on the wholesale side, it's see it also growing. You just have to find the markets. Like Alex was saying, if you find the right markets and you have the right brokers who are willing to roll up their sleeves and do the work, there's endless business out there. So we just have to keep that mindset and then just find the people that want to go do the work.
I couldn't agree more. This business is actually a lot easier to do now than the year I started. When we talk about all the things that have happened, it's much easier to do it now. When I started, you had to take an app in person, state rule. You couldn't do the things that we do today. And if you think about the amount of work involved, if you put it into a time frame, not you guys that do all the backroom stuff and do everything else for somebody, but if you're actually taking an application, once you're done with the application, most of your work is done. It really is. Don't you agree?
Yeah.
An underwriter makes a decision. They get the financials. They do everything. You just have to kind of sit and wait and prod people every now and then. But once somebody is done that piece, got the bobblehead to shake their head, yes, I'm going to do this, puts in the application, and now the application goes in a nanosecond, right? Because it's an e-app and an e-sig and everything else. Alex, just tell me, you just told me you just did one, and how long did it take to get back? And this is not an anomaly. This is somewhat the norm for a lot of policies that aren't complicated for just your regular, everyday, run-of-the-mill healthy person. How long did it take start to finish? So we can kind of end there today if we need to.
I had 3 guys in the last week that app was in one day and it was approved as applied the next day. So and that's the best feeling ever. The disability insurance guy. And all those people were under the age of 35. And that's why buying it young cannot ask people to do it sooner than today, right? Because it's just so much easier. The things, when I get someone that's 50 years old, and again, not to put age out there, but when someone wants a quote for 50, I'm like, what's wrong with you? And how long is this going to take?
Every now and then the person just realized, and then every now and then they realize that something is wrong. And you probably get more calls that something is wrong than actually, I'm just going to get this because you know what? It's really time. I'm making bank and suddenly my life turned around. I'm going to get this.
Yep.
I agree totally. Totally.
So it's what's really interesting that when the point that you made, it's way easier to write the business today than it was 30 years ago, but the awareness has reversed. That's what's crazy is that it's so much easier, right? You can get it in and done in a day and a half, but there's less people talking about it.
And the phenomenal things about disability insurance at a young age is you're most likely going to be standard and done and have 2 things: a rate guarantee forever at 27, right? Whatever you bought that amount for at 27 never changes. And number 2 is you've got future insurability without ever having to worry about the medical doctor again. 2 great things.
Yeah, I'll give you a quick story. I had a conversation with a buddy earlier this year, and I was talking to him about disability insurance, and he bought life insurance with me because he had just gotten married, and he's like, man, he's in sales, and he's like, man, I don't think I'm going to buy this. And I was like, well, why? And he's like, well, I just don't, what am I going to get hurt with? And I was like, I'm not worried about you getting hurt, but I said, I will tell you, you sit at a desk all day and you're in claim. I will tell you right now that back claims are one of the biggest reasons why, people go on claim. He just told me yesterday he's got 4 bulge discs for that back pain that he's been having all year.
There we go.
And I said, okay, well, if you would have bought it when I told you to, you don't have, because he wasn't going to the doctor. He just trying to tough it out, Well, now you have a spine exclusion if you ever want it, he's 32.
Crazy.
What do you say, gentlemen? We ready for 26?
We're ready. I'm ready for warmth. That's what I'm ready for,
Well,
there we go. Well, cheers to a awesome 2025 and look forward to hanging out with you all in 2026.
See you, boys.
Happy holidays to everyone. Wish you all the best, you and your families. Appreciate it.
Likewise. Take care. Thanks, Alex.
And remember, financial planning starts with a risk protection package first.
And your clients are counting on you. See you on the show next time.
All right, my friend, be well.